Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over Twitter information about commodities, a bunch of different information across the whole sector. It could be precious metals related, oil related, copper, whatever it is. If it's commodities related, I usually share it on my Twitter. And I retweet a lot of stuff that I think is important information. We're going to go over that information together. I'll give you my financial opinion and insights on it. And if you want to follow what I'm doing on Twitter, it's at Finding Finance. That is how you find me on Twitter. So looking at this, I'll just kind of go through it, give you my opinions. Most great investments begin in discomfort. And I agree with that. When I was buying my oil stocks in 2020 and natural gas stocks, some of the stocks were getting eerily close to bankruptcy, some of these larger in-debt companies. And that's where the value is, though, because they get pushed down by investors and shorted to very low levels. And if they don't go bankrupt, everything reverses, especially if the price reverses quickly for them, the oil price, that is, and natural gas price. And then all the shorts have to do a bunch of short covering. But definitely the great investments begin with a lot of discomfort. And a lot of people are going to be telling you you're crazy because you're buying something that's down so low. Breaking uranium. French power futures soared to $900 euros per megawatt hour. This is still in full vertical mode. This needs to slow down, guys. This is looking a little bit ridiculous. And, a solution is nuclear. That is a solution. This is what no nuclear looks like. It looks like prices go nuclear to the upside. That's what it looks like to me. This is the massive topping structure in play for the S&P 500 versus oil. What this is telling us is that oil is probably going to vastly outperform the S&P 500 over a long period of time, but it's still in the topping process. So this tells us multiple things. This is Patrick Karam did this chart. It's a great chart. So it's the S&P 500. So S&P 500 is outperforming oil as it goes up. Oil is outperforming as it goes back down. We had a topping structure that he's got in this box here. And I think what's going to happen is this could potentially maybe go a little bit higher. That's what he has. I tend to think that this could potentially be this guy here is this guy here. And that this move might be a little bit different. So I think, this is me, a little bit different, is this arrow here is probably somewhere where it's going to be is somewhere right in this general vicinity. It very well could go all the way up to this wall again. I just think that the wall he's got here of this move here is actually this move here. Either way, I think that we are going to be coming up to a pattern very much like in here where this gray arrow line is. And I think we're going to sit there for a little bit and then head lower. That's my take on it. And overall, though, we still have a long runway ahead of us for a compression of oil to outperform the S&P 500. That is where I completely agree. And I think he's got a great looking chart here for a long-term look at this. So good job, Patrick. Coming to, we'll go here. So the tide is turning for uranium. The U.S. Congress passed the Inflation Reduction Act in August 2022, which included a $700 million funding package for the DOE's HALEU availability program. In the UK, in April 2022, the UK government announced plans to build 8 new large-scale nuclear power plants and increase the share of nuclear power generation in its energy mix from 15 to 25% by 2050. Canada, there is significant government investment in small modular reactor technologies in Canada, as well as provisional, I think I said that right, SMR demonstration projects. European Parliament voted to include nuclear power projects in its EU taxonomy list as sustainable form of energy. France recently announced plans to build up to 14 new large-scale reactors and commercialize SMR designs. Belgium announced its decision to reverse its nuclear phase-out plans and announce plans for 10-year operating extensions. Germany has announced that it may reconsider its nuclear phase-out plans as it struggles to mitigate the risks of its heavy reliance on sourcing of Russian energy resources such as gas. Japan government has stated its commitment to a target of 22% of electricity generation from nuclear by 2030. Japan imports over 90% of its primary energy needs and is looking to decrease dependence on coal and gas. And then we also have South Korea. The new pro-nuclear president-elect stated that intention to reverse phase-out plan and reset its energy mix with nuclear to account for a minimum of 30% of electricity generation. So that's a bunch of good information for nuclear and also uranium. Coming on down, this is more uranium information. The fireworks start above the black line. This black line is a inverted. It's the neckline of an inverted head and shoulders. Shoulder, head, shoulder that is developing in the ratio of URA versus the uranium, sput uranium. And once we get this guy moving, we could see URA really start to kick it into gear. But that's what the ratio looks like at this moment. This is Doomberg. He's going to be on. I'm going to record Friday. It'll probably be released Saturday or Sunday for you guys. But he says, guys, watch out for the waterfall. If there was a waterfall, we heard about it on TV. Where's your tinfoil hat, conspiracy theorist? So that's what we've got for Doomberg. He's probably talking about energy or whatever else. But it's just an analogy here. Oil markets today. It says U.S. government dumping its strategic reserves. Recession fears are heating up. China facing a full-blown balance sheet crisis. And still, oil trades at $100 a barrel. This is the oil to S&P 500 ratio. We are bottoming out and it's starting to head higher where oil is outperforming the S&P 500. One of the comments he says is oil has never peaked with aggregate capex for producers at such depressed levels. So more than likely, oil is going to continue higher because of those depressed levels in capex. This says this won't end well. There are not even remotely enough battery metals to go 100% electric. California to ban the sale of new gasoline cars by 2035. And I agree. I think we're going to get into a very tight commodity market for battery metals. It says here, with the energy sector trading at an estimated 26% free cash flow yield at $100 and quickly approaching debt-free status, we will see meaningful increases to dividends and share buybacks in the quarters ahead, potentially re-rating the sector from its current 2.7 times enterprise value to cash flow multiple. We've got more ounces leaving the COMEX, 1 million ounces of silver out of the COMEX vaults, and another 2,500 ounces of platinum out of the NYMEX. Doesn't sound like much for platinum, but that is 1%. Only 240,000 ounces left of platinum in inventory. Now, here's another thing that I find highly weird. This is about oil, crude oil futures. Another day of wild oil market volatility. These $1 or $2 step up or step down moves are interesting. And you can see this step down move at the end of the day here. Someone is almost, they're dumping oil futures all at once to try to get the price to move down. They're probably trying to put in a bearish engulfing pattern to get it like that. And it's as if someone is manipulating the market, the paper markets. Maybe it is, maybe it isn't. Patrick says, can natural gas be the most insane arbitrage play right now? You tell me. And right now, this is kind of the way that this guy moves back and forth. The dark line is U.S. natural gas. The regular candlestick line is United Kingdom natural gas. Whenever we get these large gaps, things usually close down. I think that U.S. natural gas futures is going to head higher, and eventually United Kingdom natural gas futures will eventually head lower. We've got a large disparity between these two prices at this time. I'm playing this arbitrage with American and Canadian natural gas companies. If you guys are interested in knowing those companies and how I'm playing it, it's in the description link below. Platinum membership will get you that information. Coming on down, we've got uranium boom coming. I talk about it with Scott. You can definitely watch some of these clips. Total collapse. This here is the German baseload electricity price rocketing higher. France is the same way. This is not good for European countries. Definitely not good. We've got Scott here. The most valuable commodity in the world with unprecedented energy crisis is also the cheapest in the world versus other commodities. This is a gift. Nuclear renaissance is coming. This is the uranium to gold ratio. We are very low. We're breaking to the upside. It looks very good for uranium. Again, doesn't mean that we are going to automatically just move higher immediately. What we are what I'm expecting is a move higher, and it will move very fast at some point. I don't like trying to project the timing of it on the short term, but I do think that eventually we're going to work our way higher and start to outperform basically all of the other assets. What that means is that your asset is appreciating faster than all the other ones, and you can buy more of other assets. That is the purpose of investing, increasing your purchasing power of other assets in the world. This is uranium, has had a great day. Mega uranium is an example of one that could rise by 600%, maybe even in excess of 1,000% during this bull market. This is that big bottoming pattern with a nice kind of bowl-shaped pattern. It's pulled on down. We're starting to break higher here. We've got a long way to the target area, at least with North Star's opinion here. And I agree with it. Looks really good. This is nearly 3 million ounces out of registered today. This is August 24th of silver, only 52 million left. Our inventories are getting eaten up of a whole bunch of different commodities. I don't know how they're holding this stuff down. This is also the inventory of crude oil, gasoline, and distillate. We are heading down of that inventory even at faster paces. We are continuing to draw down inventory in relationship to the 4-year average here. At some point, prices are going to have to go way higher to slow down this rate of change. And that is what I consider to be an investment opportunity. Yeah, Platinum members, midweek update. The midweek update's up. You can see it. It's already posted. You can see the companies I like. We talk about monster gains and some of the stuff historically that I should have done or would have done. If you're interested in silver and where it is heading, why watch copper? Why watch the copper miners? Because of this relationship. Basically, COPX and the silver futures price are highly correlated together. And the one thing that I kind of find weird, it's almost as if copper gets extracted out of the ground more. I would think silver would come out of the ground more as copper came out. But either way, they are very highly correlated. One thing to know. U.S. oil was poking its head out. I know we had a little bit of a reversal today, but there's that. If energy isn't cheap, nothing is cheap. A whole new paradigm is unfolding. Zeros are about to be added. You need to prepare now. And he's talking about this breakout of this kind of dome-shaped pattern to the upside. And what we have here is escape velocities achieved. Price is now higher than the previous all-time high for 12 months and counting. Transitory, it was not. It started long before Russia, Ukraine. If I saw it coming, our ruling elite must have as well. They're either totally incompetent or willingly complicit in the destruction of lives in society. This is the U.S. natural gas roadmap, and this is what I'm playing with a lot of companies, is the disparity between these two. I'm holding on, and I think this will go much higher over time. We've got that nice bowl-shaped pattern that we're following. This could break higher and kind of work its way over to the bowl-shaped line and continue higher to meet the disparity between Europe and U.S. natural gas pricing. So that's where I'm going to end it, guys. A lot of good information there. And hopefully it helps you kind of get comfortable with the commodity sector and all this different information. I look at information and data through charts mainly. I do not really look at news or anything released unless it is impacting the fundamentals. Inventories I think are highly good to look at. I'll say these technical analysis charts are good to look at, ratio charts. And that's where I really gain a lot of my data. I don't really sit there and play with narratives too much. I do put a narrative to a lot of this so everyone understands kind of what the charts are meaning. So commodities are very much alive and well. I think we're going to do very well over the long period of time. Short term, things can get kind of hairy and we can go up and down all over the place. Over the next 5 to 10 years, I think we're going to be sitting pretty well in commodities. If you guys like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the website. Description link below, Platinum membership. That's the one I would sign up for. And we'll catch you next time. This is Finding Value.